Teresa, good morning. Thank you for joining us. Before I get into specifics about your stock and portfolio strategy, let's talk about the big picture. Now, Indian markets or Indian equity markets have done exceptionally well last year. But this fiscal, which is 2015 or this calendar year 2015, things have been choppy. So what is your sense about India as an investment destination?
We like India very much as an investment destination. Things, of course, get choppy from time to time. We have seen money rotate out of India and into the equity market boom, or whatever you want to call it. You could call it a bubble, I suppose, also in Chinese equities. So we have seen rotations in and out, but I think that it'll even out over the year.
Teresa, hi, morning. So how does India fit in the global scene for Cartica Capital, and what's the total invested amount globally, and how much have you allocated towards India?
We have about $2.6 billion invested globally. We have a concentrated portfolio, so only about 20 stocks, and about 1/3 of our investments are in India. So we're way off the benchmark.
The FI view on Modi is divided. While some say give him some more time, others say nothing's been done as yet. Which side of the fence are you on, and why?
I would say we are squarely in the middle. We are not a group that had super high expectations for Modi, because what you can do at a state level is very hard to replicate at a national level. And we're very aware that a lot of the policies have to happen at the state level in India. What we would very much like Modi to do is address some of the big problems that make India so dismal on the doing business, ease of doing business indices. And so I think the two most important things are starting a business and letting a business go bankrupt. And if he can deal with some of the low-hanging fruit that there is on the policy level, that will be a big step forward.
Right. Now, Teresa, two stocks which have done exceptionally well for you are Page Industries and Eicher Motors. They're expensive stocks, and they were expensive stocks 2 years ago, 2.5 years ago when you bought them. So I wonder, for a value investor like you, what prompted you to buy into Eicher Motors and Page Industries? I'm curious to understand the rationale, because they've really made a lot of money for you and your unit holders.
It's a perennial question of what is value. If we look at a company like Eicher, for example, it will have a 73% earnings per share growth this year, with a backward-looking PE of about 45 times, a forward-looking PE of about 28 times. So we're talking about a price earnings divided by growth ratio, whether you're looking backward or forward, way under 1. And that is very good value. When you get 73% earnings per share growth for half of that in PE, that's excellent. For Page, I would say we are looking at it as price to earnings divided by ROIC. And on that basis, it's the cheapest of its competitors.
Teresa, your latest buy is PI Industries. What's the rationale for investing in this one?
First of all, we think that it's a very good company. It's very important to us that our companies be well run, have great management, have a great business model with visibility as to how they can have sustainable revenue growth and margin growth. And part of the Modi agenda is to have agriculturally more productive India. India's agricultural productivity has lagged tremendously. I think that really is a policy that's in the right place. And I think PI is addressing one of the key issues in India, which is this getting productivity up in the agricultural sector.
Okay. Now, my question is, you just briefly spoke about Royal Enfield numbers as well and Eicher Motors. How much longer do you believe that the Royal Enfield premium will stay with Eicher? And what do you make of the CV business and the new utility vehicle that the company's launched as well?
I have to admit I have a soft spot for the MUV, the multi-use vehicle, because it just looks fabulous to me personally. We are not putting any value on it in our discounted cash flows, so that is aside. There's still a 5-month backlog for the Royal Enfield. This year, the company will be producing 400,000 units a year, which is more than Harley-Davidson produces. So the backlog might shrink. So we do think that there will be a normalization in the motorcycle market at some point. We do believe, and I have to tell you that this is not on the basis of hard evidence, but just straws in the wind, that we do expect that finally, after 3.5 years of a terrible investment situation in India, we might see the investment cycle turn the end of this year, the beginning of next calendar year. And then I think we will see some real growth in the commercial vehicle market. And they have a great product with their Volvo truck, really a great product. It's light, it's energy efficient, and it's comfortable for drivers, which was never a concern in the past. But now that it's difficult to get drivers, I think that's really important. So I think they're really hitting all of the spots they need to hit on that.
So when do you expect the CV cycle in India to turn, and why have you reduced your exposure to Mahindra Finance? Because Mahindra Finance indirectly is one company which will benefit whenever the CV stroke SUV cycle will reverse.
We're no longer in the stock. And the reason we rotated out of it is it's a well-managed company, but the policy wins in India, we believe, are going toward the urban sector and away from the rural sector. Obviously, the rural sector will always be important in India, but just in terms of the grand policy wins, we see them going in the favor of urban India.
Teresa, you've got a 2% stake in Supreme Industries as well. What growth avenues are you looking at in this company?
We have a small position in Supreme Industries. We're looking there for the, again, to go in favor of policy of more building in the residential sector, which is very, very needed in India, and the increase in indoor plumbing. Because it's directly a play on Modi's interest in increasing the sanitation options in India. So that's really what we're looking for as growth drivers in PI.
Very interesting. The other question that I have is about the parameters that you see when you consider making your next investment in India. What would be the key red lights and the green lights really?
Well, the thing that is really lovely about opportunities in India is that it is possible to find companies in India that have a great penetration story, such as Page Industries, where people can go from buying very inferior or homemade underwear to store-bought underwear that's a very, very affordable luxury. A pair cost $1.50 in US dollar terms. So you can find these great stories there, and you can also find great business people who are very careful about the way they run their business, and they can run it with increasing margins, and do have their eye on capital allocation and the return on invested capital. So that we like in India. And then there are two globally competitive sectors we're doing a lot of research on.
Teresa, such a pleasure that you could join us today on the channel, and thanks so much for getting in your perspective.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.